So auditors, so what you need to be able to know about this particular topic is who is an auditor, who is an auditor, who is an auditor, who is an auditor, then appointments of an auditor in a company, appointment of an auditor in a company. Then you need to actually to be able to understand the duties of an auditor, duties of an auditor in a company, duties of an auditor in a company. Then you need to actually to be able to understand auditors' right to information, auditors' right to information, auditors' right to information. The other thing you need actually to be able to understand about auditors is the rights of an auditor, rights of an auditor, rights of an auditor. Of course, this one is one of them. It's actually very key. But we have other general rights that the auditor should actually be able to enjoy while he's actually carrying out the audit work. Then another one you need to actually be able to understand here is the procedure for the removal of an auditor. Procedure for the removal of an auditor. So these are the key things that you should actually be able to understand in this particular topic. Who is an auditor of the company? So appointment of an auditor, how does it actually happen in the company? So we can talk about appointment and remuneration of an auditor. Appointment and remuneration. We can talk about appointment and remuneration of an auditor. The duties, why do they actually appoint an auditor in a company? What will be his duties in a company? So the auditor's right to information is actually very key. Then other rights of an auditor in a company. So of course we are saying the major right is actually to access the information in the company, but of course he has other rights in the company. For example, you must actually pay an auditor once you appoint him as an auditor of the company. So that is a right. We'll see other rights that he's actually able to enjoy. What is the procedure of actually being able to remove an auditor? So you appointed him, but now you want to remove him from office. For example, if his term has not actually come to an end. So how will you basically be able to remove an auditor of the company? How will you actually be able to remove the auditor of the company? So when you talk about an auditor, so an auditor is actually an independent officer who is actually appointed, most importantly, to protect the interests. He is actually mostly importantly appointed to protect the interests of investors. So we can actually say investors or subscribers to the shares of the company. So he's actually an independent officer appointed to basically protect the interests of the shareholders or basically investors in a company by being able to basically check on the affairs of the company and be able to ascertain whether they reflect a true and fair view about the company. Because one thing you realize is that in a company, directors are normally appointed to basically manage the company on behalf of the shareholders of the company, or members of the company, or subscribers or investors of the company. So these particular investors are not actually always in the company there to monitor what is actually happening. So the key guys, they're actually usually the directors. So they can't just really trust the directors. So there has to be an independent officer who basically has to ascertain whether this particular company, its affairs actually reflect what is known as a true and fair view about the company. Because maybe these particular directors you've actually appointed, so those persons who have the mandate to ensure that proper books of accounts of the company are actually kept are usually the directors of the company. So sometimes, so therefore these particular members who actually appointed them, they have to basically have an independent person. So there has to be an independent person who should actually be appointed to be able to try and actually check these particular books prepared by the directors of the company. Do they actually reflect a true and fair view about the company? So it's usually appointed basically majorly to protect the interest of the subscribers or the investors of the company, the investors in the company. So in simple terms, you can actually just basically say an auditor is actually an independent officer appointed to basically protect the interest of investors or subscribers of the company by being able to check whether the books or the affairs of the company actually reflect a true and fair view about the company. Those books that have actually been prepared in the company, they actually reflect what is actually happening on the ground, or maybe on the ground between different, or things actually may be different on the ground. So it's usually actually an independent officer appointed to basically protect. That's the first thing you should actually be able to know, to protect the interest of investors in the company by being able to check whether these books prepared maybe by the directors of the company reflect a true and fair view about the company, reflect a true and fair view about the company. So that is what we mean by an auditor in a company. That is what we mean by an auditor in a company. That is what we mean by an auditor in a company. That is what we mean by an auditor in a company. So with regard to basically auditing companies, so it basically means that a company has to ensure that it has actually appointed maybe an auditor to be able to check on its books, or whether its books actually reflect a true and fair view about the company. So under the act, an auditor, we are saying, is actually appointed to safeguard the interest of investors or subscribers in the company. So with regard to auditing the books of accounts of a company, it is that all public companies must ensure their books of accounts are audited. Then this one actually also applies to companies. So this applies also. So this applies also to companies. This applies also to companies dealing in banking or insurance business. So each and every public company must actually ensure that its books of accounts are actually audited. So this applies also to companies that are actually dealing in banking or maybe insurance business. So it doesn't actually matter. For the case of private companies, if it is a small private company, or it's a small company, or is a small private company, then in such a case, it will actually be exempted from its books being mandatory, or its books actually being audited. It's not actually a must for small companies, which are private companies, for their books of accounts to be audited. So the threshold for basically ascertaining that whether a company is actually a small company, then a small company, so when you talk about a small company, we mean a small company basically means that the turnover is not the turnover in a year is not more than 50 million. It's not more than 50 million, or the net assets are not more than 20 million. In such a case, such a company will be categorized as actually being a small company. So it is a small private company. So if its turnover is not actually more than 50 million shillings in a year, basically turnover means maybe your sales do not actually exceed 50 million, or maybe your net assets are not actually more than 20 million, then in such a case, you will actually be categorized, as actually being a small company. So for small companies, which are actually private companies, is not a must for their books of accounts to be audited. It's not a must for their books of accounts to be audited. But of course, sometimes it just forces them to basically ensure that their books have actually been audited, because, for example, if these particular small companies want to make a return, for example, to the Kenya Revenue Authority, then of course they must actually provide audited books. So sometimes, even if you want to, nowadays, even if you want to open a bank account as a company or a limited company, a private company, you will be required to bring audited financial statements for the last maybe three years. So other requirements actually just force these particular small companies to ensure that their books of accounts have actually been audited. But according to the Companies Act, if you look at the Companies Act, private companies, which are actually small companies, is not a must under the Companies Act or under the statute for them to ensure that their books are actually being audited each and every year. So if you this particular company is categorized as a small company, then in such a case, it basically means that under the Companies Act, it's not a must for these particular companies to ensure that their books of accounts have actually been audited. But of course, what I've just said then basically makes this one to become irrelevant, because I'm saying for small companies, even if nowadays you need a bank account, they require you to basically bring what is known as your audited financial statements for the last five years, or maybe 3 years. It's normally 3 years. For example, nowadays, if you want to make a return to the Kenya Revenue Authority, you have basically to provide your audited financial statements. So this one basically almost becomes irrelevant, but of course, that is what the Companies Act actually states. If a company is a small company, it won't actually be, it's not mandatory for it to basically ensure that its books of accounts have actually been audited, So it means that for a small company, I've told you how they categorize it under the Companies Act is, for example, if this particular company, the turnover or annual turnover is not actually more than 50 million. But of course, this particular small company only applies to private companies, because I've told you any public company, it doesn't matter the turnover or maybe the net assets, it must ensure that its books of accounts have actually been audited, whether it is small or big. The small company categorization does not actually apply to public companies. It only applies to private companies. It only applies to private companies. Then another reason that could actually make a company not to ensure that its books have actually been audited, for example, for example, that particular company has been dormant for a whole financial year. So there's no transaction that has actually happened in that particular company. So that could actually make a company be exempted from actually ensuring that its books of accounts have actually been audited. Because what are you actually auditing? Because there's no any transaction that has actually happened in the company. So in such a case, if the company has been dormant since maybe formation, or maybe in a particular financial year or from the previous financial year, then in such a case, it means that there's no need for actually ensuring that the books of accounts have actually been audited. So sometimes it basically means that for a dormant company, or maybe if it has been dormant since formation, it's not a must for the books of accounts to be audited. Or for example, if it is actually a small company under private companies, then it's not a must for the books of accounts to be audited. And this is actually according to the Companies Act. But for public companies and any company that is dealing in basically insurance or banking or insurance business, whether it is private or maybe public, it doesn't matter. It must actually ensure that its books of accounts are actually being audited. So maybe you could be asking, why is it actually a must for maybe banking or insurance business to ensure that their books of accounts are actually being audited? Mostly you find that, for example, banks, they basically have money for their customers. You deposit your money there. So that particular money should actually be protected, because there are several people who have an interest in banks and actually also insurance. Insurance businesses basically you give them your premiums. So you might not actually, maybe those premiums are not actually existing. If they don't provide audited books, how will you actually be able to ascertain this company still actually has our premiums, which are maybe actually safe? So basically it means that for banking and insurance business, they must ensure that their books of accounts have actually been audited. So that is with regard generally to a company actually auditing its books of accounts. And the books of accounts will actually be audited by the company being able to appoint a person known as an auditor. An auditor, I've said, is an independent officer appointed basically to protect the interests of the subscribers or investors in the company, or shareholders or members of the company, by being able to check whether the books of accounts or the affairs of the company actually reflect a true and fair fair view. Because in this case, we are saying the books of accounts of a company, those persons who have the mandate to prepare them are actually the directors of the company. So these directors could actually maybe collude and maybe cook the books of the company. So to protect their interests, they must appoint an independent. There's that particular word, independent. It must be there. When you talk about independent, is actually one of the requirements when actually appointing an auditor. He should actually be an independent officer. It doesn't have any relationship to do with the company. So in this case, it means that, for example, if this particular auditor being appointed is a relative to one of the directors, so then it means that there is no actually independence. So independence must actually be ascertained before this particular auditor is actually appointed. It's just an independent officer who doesn't have any relationship to do with the company. So coming in to be able to check whether the affairs of the company reflect a true and fair view. So that is what we mean by an auditor. That is what we mean by an auditor. So you can actually be able to look at how he is actually appointed. So appointment of auditors. Actually, here we basically just summarize most of the things about an auditor. But if you want to know more about auditing, I think the combiners who are doing auditing, you learn more about auditors and how they carry out their work. But here we just look at a summary of his key role in the company, because he's actually a very important person in a company. But if you want to learn more about auditors, then that one is actually basically explained in details under the subject known as auditing in section 4. The process is actually undergoes in actually being able to ensure that he has actually ascertained whether he's actually independent or not. So there are all those professional requirements that he must actually be able to meet, for example, integrity. So if he fails to meet all those particular requirements, then of course, maybe he won't actually be able to serve as an auditor of the company, So you can look at how he's actually appointed. So qualifications and appointment of an auditor. Qualifications and appointment of an auditor. So qualifications and appointment of an auditor. Qualifications and appointment of an auditor. So the key qualifications for one to be appointed as an auditor. So we have just two key qualifications. You have just two key qualifications. Is that number one is the qualifications. So these are the qualifications. Number one is he is a member of the Institute of Certified Public Accountants of Kenya. He's a member of the Institute of Certified Public Accountants of Kenya, that is ISPAC. Is a member of the Institute of Certified Public Accountants of Kenya. Or number two, he is a member of any other relevant body under the Accountants Act. Any other relevant body under the Accountants Act. So it is mandatory for any person being appointed as an auditor of a company that is actually a member of this particular body known as the Institute of Certified Public Accountants of Kenya. So how do you become a member of this particular body? You must have actually done, so the route of actually being able to be a member of this particular body, you must have actually basically done the CPA exam up to final level. Then of course you can actually be admitted as a member. If you practice for a certain period of time, then you'll be certified to basically provide auditing services to any person. So he's actually a member of the Institute of Certified Public Accountants of Kenya. So he has done what you're actually just pursuing, like CPA, up to final level. So once you finish, you'll basically be registered as a member of 𝑪𝑗𝑴𝑐. If you basically have certain experience, then you can actually set up your own firm that basically can actually be approved to provide auditing services. So if you are the managing partner and you have the relevant experience, basically that particular auditing firm of yours, you as the managing partner, will basically be approved to be able to provide auditing services. Or in this case, for example, you're just an individual, then of course for you to be appointed as an auditor in an auditor of a company, then you must be a member of the Institute of Certified Public Accountants of Kenya. So in this case, there are two ways of actually being a member. You can actually be a corporate body being a member of 𝑪𝑗𝑴𝑐, or you can actually just be an individual being a member of 𝑪𝑗𝑴𝑐. So for example, if it is your firm, for it to be recognized as an auditing firm, then it must actually be approved by 𝑪𝑗𝑴𝑐 to be able to provide auditing services. So for you as one of the members there, or one of the staffs, or one of the managing directors there, then of course you've actually been approved by 𝑪𝑗𝑴𝑐 to provide auditing services. So that is the route of actually being able to get this particular certification and actually membership from 𝑪𝑗𝑴𝑐. You've done CPA exam up to final level. So once you finish, you become a member, you practice for a period of time, you'll basically be approved to provide auditing services. So these are the key qualifications. So apart from you being a member of 𝑪𝑗𝑴𝑐, under the Accountants Act, they could actually basically look at any other relevant qualification that can actually basically make you to be able to provide auditing services. Maybe you've done any foreign qualification that can be recognized in Kenya, like ACCA. So in such a case, it basically means that they could look at any other relevant qualification that could actually basically maybe rank same as actually having a CPA in Kenya. Then of course, they can actually basically approve you to be able to be an auditor, or be approved to provide auditing services, So these are the key qualifications of how, or the key qualifications that are actually required of an auditor of a company, of a company. So the appointment, these are basically the appointment will likely happen. So these are basically the appointment will likely happen. So the key parties that will likely be able to appoint an auditor in the company, so you have just two key parties. For example, on formation of the company, the auditor can be appointed by the board of directors, but subsequently, I hope you remember what we said under the topic of company meetings, that at the AGM, the members will actually be able to appoint an auditor of the company. So of course, on formation of the company, when the company is being formed, there hasn't been any AGM in the company. So therefore, of course, the appointing authority in this case could actually be the board of directors, or maybe it could be the promoter of the company, appointing the first auditors of the company. But subsequently, of course, at each and every annual general meeting, the members will decide who will actually be the auditor for the next financial year. So that is what will actually happen subsequently at any other AGM of the company. But initially, on formation of the company, then of course, basically it means that the board of directors, or maybe the promoter of the company, once they have maybe the first board of directors meeting, they'll actually, of course, approve or basically appoint a person who will actually serve as the auditor of the company until the first AGM. So such that subsequently, at each and every annual general meeting, the members will actually appoint the auditor of the company, So in this case, of course, there are just two key parties that can actually be able to appoint an auditor in a company. You can talk of maybe the board of directors on formation of the company, or maybe you could actually talk of the members. These are the key parties. So these are the key parties that actually appoint an auditor in a company, because we are basically saying this auditor is coming in to protect their interest. So that's why at each and every AGM, they'll determine whether the previous auditor will continue to serve as an auditor, or maybe they could actually decide to appoint another person to serve as the auditor of the company, So for example, if it is maybe parastatal, so sometimes we could actually talk about maybe like a parastatal, or any company or corporate body that maybe the government has an interest in. For example, if that particular parastatal, maybe that particular corporate body has failed to appoint an auditor, then of course we could have maybe the relevant So sometimes you can actually have the relevant cabinet secretary appointing an auditor in such a case. For example, it is a parastatal under maybe the Ministry of Education, so they haven't been able to appoint an auditor, so he can actually step in, the cabinet secretary can actually step in and actually appoint an auditor for such a corporate body, But generally, those persons who are actually supposed to appoint an auditor in a company are actually the members of the company. So in formation, it could actually be maybe the board of directors. So each and every AGM, the members will decide who will be the auditor of the company, who will actually be the auditor of the company. So it'll serve for the whole financial year until the next financial year, or maybe until the next AGM. So what will normally actually happen is the previous auditor, for example, if his term has not actually come to an end, he'll automatically be reappointed. So he'll actually automatically be reappointed. So unless other circumstances have actually fallen in place, for example, if basically he is not qualified to be reappointed. So you could actually be asking, how could he not actually be qualified to be reappointed, yet he has been serving as an auditor of the company? Maybe his certificate of practice has been revoked by the Institute of Certified Public Accountants of Kenya. So maybe he hasn't actually followed the professional requirements, for example, integrity, honesty, independence. So ISPAC discovers that this particular auditor is basically carrying out his work without the required professional standards. In such a case, they could actually revoke his certificate of practice. So this means that, for example, if he was serving as an auditor of the company at the next AGM, of course, he's not qualified because his certificate of practice has been revoked. So you are saying generally, the previous auditor will automatically be reappointed at the next AGM in case this term has not come to an end, unless certain circumstances have actually fallen in place. For example, if he's not qualified to be reappointed, and I've said he can actually not be qualified to be reappointed, for example, if his certificate of practice has been revoked by the Institute of Certified Public Accountants of Kenya. Another one, it could be maybe he voluntarily resigns. He doesn't want to be the auditor of the company. In such a case, these particular members at the AGM will actually basically appoint another person. So he won't actually be reappointed. Or maybe if the members feel that they're not comfortable with his actually work, so they decide that they'll pass a resolution not for him to actually be reappointed as the auditor of the company, So they decide to appoint another person. So those circumstances can actually make the auditor not to be reappointed. For example, if he voluntarily resigns, so he won't actually be reappointed. For example, if he's not actually qualified to continue to serve as the auditor of the company or to be reappointed. Or for example, we could actually talk about if the members just pass a resolution, they want to appoint another person and they don't want him to be the auditor of the company, In such a case, it basically means that they'll actually appoint another person to serve as an auditor of the company, So maybe you can look at a few past paper questions here. So we can look at a few past paper questions here. So we can look at this one. We can look at November 2016, question 6A. We can look at November 2016, question 6A. November 2016, question 6A. November 2016, question 6A. November 2016, question 6A. So I don't know if you are there. November 2016, question 6A. November 2016, question 6A. November 2016, question 6A. So have you gotten the question, November 2016, question 6A? November 2016, question 6A. So I can see Catherine saying yes. I don't know if the others have gotten the question. November 2016, question 6A. So it says the Companies Act provides that if no auditor has been appointed by the end of the next period for appointing the auditor, any auditor in office immediately before that time is taken to be reappointed at that time. With reference to the public company, summarize 5 exceptions to the above provision. Summarize 5 exceptions to the above provision. So you are saying automatically the previous auditor will be presumed to be reappointed, will actually be presumed to be reappointed, but certain circumstances can actually make him not to actually to continue to serve as an auditor. So number one, with the reference to the public companies, summarize 5 exceptions to the above provision. So that is what basically I've just been talking about. So he won't actually automatically be reappointed if, number one, he is not qualified for reappointments. He is not qualified for reappointment. So that is number one. Number two, a resolution has been passed to reappoint someone else. A resolution has been passed to reappoint someone else. So a resolution has been passed to actually appoint someone else to serve as an auditor and not him to be reappointed. Then number three, a resolution has been passed that he should not actually be reappointed. A resolution has been passed, he should not be reappointed. So number two, you are saying number one, you are saying he is not qualified for reappointments. He is not qualified for reappointments. Or number two, you can talk about a resolution has been passed to reappoint someone else. A resolution has been passed to reappoint someone else. To reappoint someone else. To reappoint someone else. Then number three, we can talk about a resolution has been passed that he should not be reappointed. So the members have decided he should not actually be reappointed. Then number four, you can talk about he has given the company a notice. He has given the company a notice that he is not willing. He has given the company a notice that he is not willing. That he is not willing to be reappointed. That he is not willing to be reappointed. He has given the company a notice that he is not willing to be reappointed. Then the last one we can talk about if his term of service has come to an end. If his term of service has come to an end. If his term of service has come to an end. So I think there are certain requirements that you shouldn't actually be continuously be an auditor for the same client for a particular number of years. So if his term of service has come to an end, then of course he won't actually be reappointed. So just to protect independence, it's good that you don't actually always audit the same client for maybe like a period of over 10 years. At least you change the auditors so that you can actually basically ensure there is independence. Or maybe it could be that you are the auditor of the company. Then, of course, during that particular financial year, one of your relatives or maybe one of your brother or someone has actually been appointed as a senior officer in the company, like a director. So, of course, in such a case, you lose independence. So, you can say if his term, the last one, if his term of service has come to an end, if his term of service has come to an end, So of course, automatically the previous auditor will actually be reappointed, but certain circumstances can actually make him not to be reappointed, Then, of course, we've said the first auditors of the company will likely be appointed by the board of directors. So these particular auditors will likely serve until the next AGM. So subsequently, at each and every AGM, the members will likely be able to serve as the auditor, to basically appoint the auditor of the company. But sometimes there could actually be a casual vacancy also in the office of the auditor. So of course, the directors can actually still appoint an auditor in the case of that particular casual vacancy, but that auditor will actually serve until the next AGM, when the members could actually decide who will actually be the auditor of the company, of the company. So when you talk about remuneration, basically the remuneration of the auditor will actually be set by these particular parties appointing him as the auditor of the company. If it is actually the members appointing him, then of course they're the ones who will actually basically set what will be his remuneration. If it is the board of directors actually appointing him as the auditor of the company, then of course they'll actually basically set what will actually be his remuneration. If it is basically maybe the relevant cabinet secretary appointing an auditor of the company, then of course he'll actually set the remuneration basing on how much the company can actually be able to pay him as an auditor of the company. So these particular parties are the ones who will actually basically be able to set what will be his remuneration in the company. So this remuneration could actually come in different forms. So they could decide they're going to pay him like a salary, or maybe they could actually decide they're actually going to pay him a certain amount. So the remuneration of this particular auditor will actually come in different ways. For example, they could decide they pay what is known as audit fees. So they can pay audit fees. So it could come in terms of the audit fees. It could come in terms of maybe reimbursement of expenses incurred by the auditor while carrying out the audit work. So they could reimburse him certain expenses. For example, it could be this particular client is actually maybe far away. So what this particular client normally does is basically sends transport or maybe a fare for this particular auditor to maybe reach his premises, or maybe he fuels the vehicle for the auditor to reach his premises. So that one will likely still be seen as a remuneration for this particular auditor. Or maybe we can actually maybe say they basically provide lunch for the staff of the auditor when they're actually visiting the premises of the client, or maybe the premises of the company being audited. So that one will likely be still actually seen as the remuneration for the auditor. So the remuneration can actually come in different ways, as audit fees, reimbursement of expenses, or extension of any facility to the auditor to enable him carry out his work as the auditor of the company. For example, providing lunch maybe at the premises of the company while he's carrying out the audits. So that will actually still be presumed as the remuneration for the auditor. But of course, the key remuneration is actually payment of the audit fees, maybe at the end of his work as an auditor of the company, as an auditor of the company. So we can actually look at this particular question. So it's November 2017, question 1C. November 2017, question 1C. November 2017, question 1C. Roman 1. Roman 1. November 2017, question 1C. Roman 1. November 2017, question 1C. Roman 1. It says, summarize 4 rules governing the appointment of the first auditors of a company. Then Roman 2, outline 2 ways in which a company auditor might receive his remuneration. So you can start with the second one. Outline 2 ways in which the company auditor might receive his remuneration. So of course you are saying the auditor's remuneration will likely be set by the appointing authorities. In this case, if it is the board of directors that are actually appointing the auditor, they'll set his remuneration. If it is the members at the AGM, they'll basically set what will be his remuneration as the auditor of the company. So the remuneration we are saying can actually come in these ways. So they outline 2 ways in which company auditor might receive his remuneration. So you can actually talk about audit fees. He can actually be paid audit fees. Number 2, you can actually be able to talk about reimbursement of expenses incurred while carrying out his work as an auditor of the company. So we can talk about the audit fees or reimbursement of expenses incurred while carrying out his work as an auditor of the company. So that could actually be a way through which this particular auditor can actually be remuneration. So the remuneration could actually come in those ways. So audit fees or maybe reimbursement of expenses. And then I've actually also told you extension of any facility to enable him carry out his work as an auditor of the company. Extension of any facility to enable him carry out his work as an auditor of the company. So the remuneration could actually come out in those particular ways. So audit fees and what we've just talked about. Then there's that Roman 1 which says, summarize 4 rules governing the appointment of first auditors of the company. So summarize 4 rules governing the appointment of the first auditors of the company, the first auditors of the company. So if that one basically comes in, or basically they test such, then of course the first thing that should actually come to your mind, then of course is that the first auditor will actually be appointed by the directors of the company or the board of directors. So that is point number 1 that you can actually be able to put there. The first auditor will be appointed by the directors of the company or the board of directors. Then number 2, he will hold office until the end of the first AGM. He will hold office until the end of the first AGM. So that's when the members will actually basically take over the appointment of the auditor. So number 2, he will hold office until the end of the first AGM. He will hold office until the end of the first AGM. Then number 3, what you can actually be able to talk about, if there's a casual vacancy in the office of the first auditor, the directors will appoint his replacement. The director will appoint his replacement, or it will be filled by the directors. Just say it will be filled by the directors. If there's a casual vacancy in the office of the first auditor, it will be filled by the directors. So remember, there's a casual vacancy that was actually arisen before the first AGM. So the directors are the ones who likely still appoint the auditor to serve until the end of the first AGM. If there is any casual vacancy in the office of the first auditor, it will be filled by the directors. So it will be filled by the directors of the company. Then you can talk about if the directors fail to appoint an auditor, if the directors fail to appoint the first auditor, the company can make an application to the relevant cabinet secretary to appoint an auditor of the company. If the directors fail to appoint the first auditor, the company can make an application to the relevant cabinet secretary, to appoint one. So if they ask for any details to do with the first auditor, that's what you can actually be able to talk about, the first auditor of the company, that this particular first auditor will be appointed by the directors. So he'll serve as an auditor until the end of the first AGM. If there's a casual vacancy in the office of the first auditor, it will still be filled by the directors. And that auditor coming in to serve in the casual vacancy will serve until the end of the first AGM, when members could decide they reappoint him or they actually appoint another person as an auditor of the company, as an auditor of the company. If the company fails to appoint the auditor, maybe the company could actually make an application to the relevant cabinet secretary to be able to appoint the auditor of the company, to be able to appoint the auditor of the company, the auditor of the company. So we can look at what are the duties of the auditor, what are the duties of the auditor, and maybe look at some of his rights as an auditor of the company, some of his rights as an auditor of the company. So the duties of an auditor, what are the duties of an auditor in a company? So among the key duties of an auditor in a company is basically to be able to ensure that he's a quant of himself, or what are his roles or actually mandate under the articles of the company. For example, the articles of the company could actually basically clearly state the auditor in this particular company will be performing these particular functions. So the first thing, when he's actually appointed as the auditor of the company, he must actually be able to be a quant of himself by being able to check the articles. What are my roles as the auditor of the company? So the key thing is, or the key thing that he should actually be able to do among his duties is to be a quant of himself. What are his roles under the act or the Companies Act, and also under the articles of association of the company? Because basically there are different types of companies and they have their own rules of internal management. So the key thing, or the key thing he should actually be able to do when he's appointed as an auditor, is to be a quant of himself, or what are his roles under the articles of the company. Then, of course, he'll basically have to ensure that, that is number two, which is actually very important, to make a report at the end of the financial year that is supposed to be presented at the AGM or the annual general meeting. Because, of course, you are saying he basically protects the interests of the key stakeholders, or actually the shareholders or the members of the company. So another duty that he must actually be able to fulfill as an auditor is basically he must actually make a report to the members on their basically lay accounts before the members at the annual general meeting. So he'll basically lay the accounts of the company at the annual general meeting, such that they can actually be approved and maybe be published by the company. So he must report to the members on the accounts laid before the company in the general meeting during their tenure of office. So during their tenure of office, for example, in a financial year, then at the end of the financial year at the AGM, they must actually basically explain the accounts or lay the accounts before the members at the annual general meeting, Then another key role that he must actually be able to play, or his key duty, is basically to ensure that while he's carrying out his work as an auditor of the company, he carries out the work with honesty and exercise reasonable care and skill as the auditor of the company. So you must ensure he's exercising what is known as reasonable care and skill. When you talk about reasonable care and skill, then basically, of course, it summarizes many duties of an auditor. He's carrying out his work with professionalism, integrity, all those that are actually required of an auditor as a professional auditor, or carrying out his profession as an auditor. Then he must actually be able to ensure that he's actually basically following all those particular rules as actually outlined by the Accountants Act, So because, of course, when you're actually practicing as an auditor, then of course you must actually ensure that when you are carrying out your work, you meet certain professional standards. So when you talk about carry out the work, or basically ensure that he's carrying out his work with reasonable care and skill, then of course it summarizes many of the attributes, for example, the attributes that he must actually be able to ensure he has as an auditor of the company. So we talked about, for example, honesty, integrity, professionalism, independence. So those ones, all of those should actually be basically be met by the auditor while he's carrying out his work as an auditor of the company. So of course you are saying the key duties or the key roles while he's carrying out his audit work is basically to ensure, number one, he's acquainted of himself, of his work or his roles under the articles of the company. Then number two, which is actually very key, is basically to lay before the members of the company at the AGM the accounts of the company and explain to them basically what was actually happening in the company in terms of basically the accounts that have actually been prepared by the company. Then, of course, you are saying number three, which is actually very key, is to carry out his work with honesty and ensure that he's actually doing it with reasonable care and skill expected of a person of maybe his profession, or maybe expected of a person of his capacity while he's actually maybe carrying out work as an auditor of any company, as an auditor of any company. So basically what the auditor will actually be able to do when you talk about, for example, laying before the members of the company their accounts, when he's carrying out his work, then of course he'll actually basically ensure that adequate or basically proper books of accounts have actually been kept by the company. So there's the key thing here that he must ensure that proper books of accounts have been kept by the company, Then of course the final statements reflect a true and fair view about the company, a true and fair view about the company, reflect a true and fair view about the company, because these particular final statements will actually basically be prepared from the books of accounts. When you talk about the books of accounts, then in this case, for example, it could be meaning the original books of entry, for example, the cash books, all those have actually been prepared properly. The company has all the invoices have actually been properly kept. From the invoices, that's where basically you can now determine the final statements. So these particular final statements reflect a true and fair view as basically maybe indicated in the books of accounts. When you talk about the final statements, we mean the statement of financial position or maybe the statement of income. So this particular statement of income, you know, those ones are actually basically reflecting the final figures. For example, before you arrive at the sales in the maybe the income statement, then of course there are several transactions that are actually contributing to the sales. These ones are basically actually contained in the books of accounts of the company. So you must actually ascertain this company is actually basically keeping proper books of accounts. All the invoices have actually been filed, all the receipts are actually existing. You can actually be able to basically trace back the figure for maybe the sales in the income statement. So that particular income statement, you should actually be able to ascertain whether it reflects a true and fair view about the company with regard to the books of accounts of the company which have actually been kept. So you must ensure that proper books of accounts are actually existing, because from those particular proper books of accounts that are actually existing, that's when you can actually be able to get the final statements. So that will be part of his work when he's actually basically ensuring that he's presenting his books of accounts to the members at the annual general meeting. Then, of course, if it is maybe a public company, he could actually go maybe further and maybe look at the remuneration of the directors. So you look at how the directors of the company are actually being remunerated. Are they actually following the requirements that have actually been set out by the members? For example, how much they're supposed to be remunerated as directors of the company. So that will actually be part of his duties or actually roles as an auditor of the company, So ensuring that proper books of accounts have been kept and the final accounts actually reflect a true and fair view about the company. So when you talk about the auditor, we basically mean that before or for him to be able to carry out his audit work, then of course he must actually have one key right, which is actually known as the right to information. Right to information basically means that he has actually been given access, for example, to the books of accounts. Because if he doesn't get access to this particular books of accounts, then of course he won't actually be able to form what is known as an opinion on the books of accounts. He can't actually give the opinion that these particular books of accounts reflect a true and fair view about the company. So right to information is actually one of the key rights of an auditor, because if you don't give him, for example, access to the premises, or maybe for him to actually to be able to carry out interviews in the company while he's basically preparing his audit work, then of course he won't actually be able to give an opinion, or basically maybe even present the statements to the members at the annual general meeting. So for example, if you deny him the books of accounts, in such a case, you are actually limiting this particular auditor to be able to have what is known as right to information. So if he doesn't have the access or the right to information, then he won't actually be able to give an opinion on what are the, give an opinion on whether these particular books of accounts or the final statements reflect a true and fair view about the company. When you say right to information, basically it means that, for example, it could be right to access the books of accounts, right to access even the branches of the company. For example, if the company has branches in different places, then of course you have to allow the auditor maybe to visit such branches such that he can actually be able to get enough information to be able to enable him be able to form an opinion on the affairs of the company. Because if he doesn't have the right to be able to access this particular information, then of course he could actually end up issuing what is known as a qualified report about the company, or the books of accounts of the company. A qualified report basically means it's not a good report about the statements of the company or the accounts of the company. In such a case, it means that there's a problem. Maybe he was not actually given an access to the books of accounts. In such a case, he could actually issue what is known as a qualified report, So that is basically with regard to do with the duties of an auditor and what is known as the right to information, the right to information. So I think there's a small bit that is actually remaining about auditors. Then I think we'll start accounts and investigations. I think on in our next class, we'll be able to start another bit of accounts and investigations. But I think we can end there today. So unless you have a question or a burning question, you can actually be able to, you can actually ask if you have a burning question. If you have a burning question, you can actually be able to ask. But I think we can end the class there. I'll send the notes on auditors right away. So I have them already on soft somewhere. So I would just want to send them. Then we'll wind up with the auditors. Next time, because there's another class I'm supposed to start here. Another class I'm supposed to start at around 8:30. I can see Makanaka Chumbi says, I didn't get the director's notes. So we'll find a way on how you get them. We'll find a way on how you'll actually be able to get them. So if you have a question, you can ask. So there's another class that I normally do after this. And these things some of you actually attended last time. So if you still have an interest, you can actually be able to join, because I want to do it up to around 10. I think we were looking at formation of companies. So there's another lot that I normally teach online. So we are doing formation of companies. So formation of company is not really relevant for you, but if you think you can join and learn something, you can still join. You can still join because I know you guys have already covered formation of companies. So, but there's another lot I'm covering. They started the syllabus just the other day. So there's someone asking, are we still having exams in September? I don't think there'll be exams in September, but of course, your key interest should actually be just to finish the syllabus. Then of course, it could even be advantageous for you. Could decide maybe you are going to combine. Those who are doing only section 3, you can decide now to combine. But of course, you have to look for a way on how you'll be able to learn the section 4. So chances are so minimal that we'll have exams in, I don't think we'll have exams in September, because you've seen what the government has announced today, that all colleges and universities will likely resume their studies in January. So where do you think CASNEB will likely be able to carry out their exams? I don't know where they'll be able to carry out the exams, but I think we have to wait for CASNEB to communicate officially. But chances are minimal. Chances are minimal we'll have exams in September. But of course, I'm not CASNEB. We wait for what CASNEB will actually say. So I think we can actually end there. There's Makanaka Chumbi. I did send the notes for directors. So maybe you can find out from your classmates, or maybe you can find out from, I think, Helen. I think the others have notes for directors. I think I sent them. I think they have the notes for directors. So maybe you can find out from the other classmates or from Helen. So I'm going to send also notes for. So she just shared secretary only. So I think maybe I haven't sent. So I'll send. Maybe I haven't sent. You don't have any. I can see Subo saying I don't have any. Or there's a Eddie saying send the notes for accounts and investigations in advance. So I think I'll organize and send in advance. So I think we can end there. We can end there. So I think there's no any other burning issue. I'll share the notes for directors, so I'll organize and share. But in the meantime, let me share those ones for auditors. Those who have an interest to join the next class is formation of companies. You can